Good morning, everyone, and welcome to another special edition of Bleeding Crypto's Market Update. We're going to continue to focus on crypto, but the economical situation around the world is providing us an opportunity that I believe we should all take advantage of, and that's the stock market. Previous to this dump, that we just finished, we've been experiencing in the stock market, things were looking pretty high. So there was really no interest in getting into the stock market myself, as we teach you guys in crypto that one of the things you always look for when you're buying an asset, the very first thing you look for is, are you buying a top? In here, keep in mind this is the monthly chart. We were at the top. We were pretty much at the top. So I really had no interest in the stock market. But like I mentioned, this opportunity has fallen in our lap. And I think it would be a great disservice if I don't at least show you guys the opportunities that are being presented to us. Now, please keep in mind that the stock market is not crypto. It doesn't move like crypto. It will not give you the volatility like crypto. Perhaps when we start to recover, it may have some nice bounces, but the investment that if you're willing to make in the stock market, it's going to be more for your long-term focus. It's not something that we're going to be day trading or trying to scalp. Stock market doesn't really provide you the type of yield that crypto does, but it does provide you a good, secure, well-established avenue for investment. And what I mean by that is, we'll have to admit, guys, crypto is a great vehicle for giving us some incredible returns, but it's still very speculative. You see companies coming and going and people losing all of their money on these projects almost on a monthly basis. Some of these projects are disappearing that were once the new future, the new Bitcoin, the must-have coin, and now they're gone. Just yesterday or the day before yesterday, what was that? NPSX. I remember that thing being shilled by every crypto personality, and now it's gone. Now it's pretty much Binance is delisting it. Pretty soon it won't be available. Market cap is dwindling. 24-hour volume is gonna dwindle away to nothing. So in order to secure some of the profits that you guys have made in crypto and continue growing your investments, I really believe that the stock market will give you a place where you can take those incredible returns that you make on crypto and diversify your portfolio. Buy some real estate, stocks, find different avenues where you can generate income, rental properties. Look into doing that, maybe a small business. Don't just keep your profits and continue risking them in such a high volatile market like crypto. Diversify. Now, one of the companies that do catch my eye is Boeing. Boeing is an aerospace company that continues to just, I mean, through the years, will continue to give you those returns. We're going to do two things. I'm going to show you a current chart of where I think price may go. And just like in crypto, guys, that a lot of you have learned trading because of crypto. But remember, the principles that we teach you on trading crypto are not new. They come from traditional markets. So those same rules are going to apply when now that we're going back and looking in traditional markets. So one of the things that I like to do when I look at an asset is I like to learn the language of the asset. And I'll explain to you in a minute what I mean by that. All of these patterns, guys, and all of these retracements, and all of these gaps, they tend to repeat themselves. They go up, they allow you to take profit, it comes back down, it resets, and it starts a new wave. And when I'm done explaining these purple lines to you guys and the gaps, we're gonna go back and you're going to be amazed. Your jaw is gonna drop on where we turned around, at what level we turned around, and it's gonna look almost as a mirror image of what I'm showing you right now on the past retracement, which was the collapse of the market in 2008. And moving forward, we're going to be able to benefit on the next collapse of the economy and utilize the same type of pattern that we are looking at right now and that I'm going to show you that happened 10 years ago. So let's start with the current. So here's the monthly chart. As you can see, we turned around right here on March 2nd, 2009, was basically the reversal. From that point on, we hit a low. We started the market back up at $29.05. We hit a high of $446.01. Let's do this. That's a return of $1,435, excuse me, 1,435% in 10 years. Now, I know a lot of you guys say, in crypto, we get that, on any shit coin, we get twice as much. Yes, yes, you can. But are you going to have the sustainability that Boeing has? Are you gonna compare a company that's been around for a very long time and has government contracts and has stability and has the U.S. workforce behind it to some random shitcoin in China that is like two guys in a closet room? Are you really gonna compare that to this? No, you're not. This is as secure as you're going to get when trading stocks. And let me explain that. All of these markets are manipulated, guys. All of this market. This right here, give me 1 second. This right here is it happens every 10 years. And we know this. But we also know that we don't trust this. And we shouldn't in any asset, in stock markets, in crypto, in whatever you invest. Never trust the system. So based on that logic, you already know that dealing with crypto, since we don't trust it and we know that it can turn around at any moment, we take proper risk management. One of those risk management, one of the greatest risk management advice that we give our members is look for the free position. Free position is the very first thing you want to do when you invest in an asset. A free position, in case you don't understand what that is when you buy the bottom, you look for that free position, that 100% return. When you get that 100% return, you have now got yourself a free position. What that allows you to do is that allows you to sell half of your holding, secure your initial investment, and then you can take that holding and you can reallocate it to a different asset and use free money to continue to diversify your portfolio and grow your portfolio. Or you can choose to reallocate it back into your original holding, or leave it there, but continue to ride your stop loss up. So say, for instance, say you don't want to sell half of your position and you want to continue riding Boeing because you believe in it. That's fine. If you have other source of income where you can diversify your portfolio, great. But sometimes people don't have that option. So they want to know, well, what can I do if I'm already up 100%? will secure that, use that extra capital, that free money, and buy, 10, 20 other stocks with that money that you didn't originally buy because you didn't have the funds to do that, but now you have that capability of doing that. So take 5% of that 100% and buy different assets. But if you are like many that have additional source of income, and this is something that you invest and you put money into every month, then you can say, you know what, I'm going to leave the money in here, but let me put a stop loss at 100% return, and let me continue to ride that up. Use the same principles that we use at in on crypto. Keep in mind that I do not have the EMAs in this chart. I don't have the MACD, the RSI, the volume indicator, only because I'm trying to make this video as clean as possible, because sometimes it's very, very difficult for people to understand what a Fibonacci is and all these purple lines. And I don't want to drown the video with just a lot of different lines. So I want to try to make it as easy as possible. But you guys all know that we use the EMAs and the RSI and the MACD and the volume as part of our tools. But for the purpose of this video only, I'm trying to show you where those gaps are. And it just makes it a little bit easier when you don't have so many lines on your chart. So looking at the potential here and looking at where we're at with these gaps, let me explain to you what happened. As we were coming up, we put in these monthly gaps. Now, gaps, as you know, could be in different time frames. The higher the time frames, the more powerful they are. Yesterday, I did a video on the Dow Jones and showed you the weekly gaps and show you some of the levels that have already been filled and where I think we may go. When I opened up the monthly chart to give myself more data available on the chart, I noticed the gaps, quite a few gaps on the monthly. And since there were so many gaps on the monthly, I didn't feel the need to go in there and start looking for the weekly gaps, which I'm sure are going to be many. You have to think one of these candles is a month, and inside of these months, there was 4 candles, and I'm sure that one of those 4 candles might have had a gap, but it's kind of overkill. Again, for the purpose of this video, when you have these many monthly gaps, this is close enough. And I haven't shown you the mind-blowing part yet on what happened the last time. I'm saving that for last, because it's really going to drive home what I'm trying to tell you guys about how markets and assets follow a pattern. They follow a language. And that's one of the things that I like teaching you guys. When you look at any asset, whether it's Bitcoin, XRP, Bitcoin Cash, they speak to you by a market structure. And when you recognize that market structure, you recognize that language, they seem to repeat themselves over and over and over again. And many of you, I've shown you guys many times before how that works on retracements on the fib. A lot of these like to respect a certain level of retracement before they turn it back around, and 9 out of 10 times they do the exact same level of that retracement, whether it be the 0.50, the 618, the 706. They tend to repeat themselves. Not always, but you find that pattern. And that's basically what we do as an analyst. We try to find the most common pattern and try to incorporate that into our analysis to hopefully come ahead and have more wins than losses. We're not fortune tellers. We don't have these special powers. All we can do is base all of our findings on the facts. Without the facts, it's just emotion. Without the facts, it's just guessing. It's anyone's guess. But with the facts, we kind of reduce that guessing, and we try to make it a little bit more of an educational guess than just a random guess. So based on Boeing and where she's come down, I want to show you we've already crossed 1, 2, 3, 4, 5. We already filled 5 gaps. Now, we just landed at 786. We have a gap exactly at 786. Amazing. We've already touched inside of these 2 gaps here. So the rules of gaps, again, they come from the stock market, not from crypto. When you cross into a gap, you're more than likely going to fill it. Now, when you look at this here and you say to yourself, wow, this is very close to 886. And I know most of you guys are thinking 886, that's where we love to buy. We love to buy 886. We can never go wrong buying an 886. And yes, you're absolutely right. You can never go wrong with 886. But you also have to think of the overall market. And we were doing this the other day in one of our Zoom sessions, talking about, I forgot which asset it was. And I was telling you guys that looking at where it is and where Bitcoin is heading, it's more probable that we're going to be coming further down. I'm sure you guys remember which one it was, but we cover so much stuff in our Zoom session, especially with the new group trading plan, that I'm a little fuzzy. But I don't remember which one it was. But my point is that sure, buying 886 is great, but we've Boeing has dropped so much, and we're so close to 886. And I feel like the stock market, the Dow Jones, still has so much more to drop, that even though 886 looks incredibly juicy, I really feel like we can get Boeing less than $76. Now, here's the thing. We teach you guys to never try to find the bottom, because trying to guess the bottom is a very dangerous game. Same thing with the stock market. You just don't know. Scaling in is never a bad idea. But scaling in, you have to have a certain type of mentality. You have to understand that you're buying to the downside. So what I mean by that is, if you're going to buy at $76 and you make that commitment in your mind that you're going to buy at $76 because you don't want to take a chance that it may turn around at 76, which is, I think it's highly unlikely, but it's possible. And you don't want to miss that. You have to keep in mind that if it drops, you're going to be okay with it. What you don't want to do is, if you're trying to buy something for long term and you buy it at $76 and it drops to 53 bucks, that you're going to be like, oh God, no, I'm going to sell, or I'm going to put a 10% stop loss or a 15% stop loss, and then but I'll continue to buy lower. You're just giving your money away. At that point, you're just giving your money away. So don't buy. If you can't handle buying at 76 and holding it until it turns around and continuing to scale in and buy as it go down, then don't buy at 76. Then take that chance, buy lower to a certain level that you're going to be okay holding. It's kind of the same thing we tell you guys with crypto. When you're investing long term, it's much different than when you're doing a day trade. When you're doing a day trade, obviously there's a lot more volatility, a lot more risk, especially in crypto where things move much quicker. You want to put a stop loss so that you can still have some skin in the game and you're not losing so much as you're trading. Long term investment, you're looking for, you're looking to buy the bottoms and you're looking to sell way in the future. You don't need to worry yourself with a stop loss for 5% or 10% and lose your money when your goal isn't to sell here or here. Your goal is to sell 5, 6, 10 years down the road. There's no need to put a stop loss. And a lot of people have a hard time with that. I know it's a big taboo. No, you have to use a stop loss. No, you don't have to use a stop loss. If you're investing for long term and you're buying the bottom, in my opinion, I think is foolish to put a stop loss when you're buying a bottom. However, everybody has a different way of viewing the market. Everybody has a different way of investing and what they can handle to the downside. So if you're one of those people that can't handle a little bit of downside and you don't trust what you're buying and you don't think that it's going to go back up and you don't think it's a smart idea to buy to the downside, then, or to scale in, better said, then don't buy it. As simple as that. Don't buy it. So with that in mind, 886, never a bad time. Now, 886 is going to provide you, if you look to the left, and we just snap a line here, and let me change this color to green. And if you look at the properties and you look at the market structure of this area here, look how strong this was as resistance for months. I want to say almost a year. Look at this. Probably longer than that. From March 2010, wow, for 3 years, almost 3 years, to February 2013, we stood underneath this green line. So we know that 3 years of resistance is not going to be broken that easy. And here's an example where we stop now, 786. If you look at the gap line, this was support for October through, October 2013 through 2016. Almost, again, one month shy of 3 years, just like it was here before we started taking off. And look where we're at. Very, very strong support. Just like in crypto, guys, the longer something stays as support or as resistance, it's when it flips, it's going to do the same thing. So for instance, this was strong support. So obviously on the way down, it's just not gonna close that quickly. Yes, we broke through it here because it was on a downward spiral, but we did not close here. It's very different when you leave a wick than when you leave a candle. The candle is what you're looking for. A lot of things can happen inside of this candle until it closes. When it closes, that's when you can actually measure and really use the accurate data, because you can say, okay, that's it. She's gonna close at 88 bucks. 80, no, she went all the way up to $147. That's a big buffer here. So once you close this candle, then you can understand, okay, where did support actually come in? And look, on the next candle, it confirmed it perfectly. 3 year support is still holding. Now, with what's going on in the world, with the further downside that I'm looking for in the stock market, yeah, it's more than likely we're going to break this. And it's more than likely that we're going to fill back into these gaps here that this wick already touched into. Now, when we get to 886, like I mentioned before, it's never a bad time to buy. You're buying at an 88% discount from all-time high. And that's usually what investors like to look at. But I'm going to show you some other past data that I told you is going to blow your mind. And trust me, it will. I'm not trying to hold you in suspense. When you see it, you're going to be like, oh my God, this is incredible. So 886, 3 years as resistance. It is not going to break easily. It is going to probably stay there for a while. We may get a wick, but I don't see it. Anything can happen, but the probability is it's going to hold pretty well. And if it holds pretty well, like I mentioned earlier, and it does go up 76 bucks for an asset that was $446, I think that's a nice return. 476% return on your money. Now, am I saying that it's going to stop here? No, I'm not saying it's going to stop there. I'm sure it's going to go higher, as every retracement yields another opportunity for it to go higher than the previous run. But I like to base my assumptions on what I can see. So I can see this. I can see a place that it already visited. So for the sake of giving you a number, I'd much rather give you a number of where we actually hit than projecting where it may go. And you can do that. You can do that actually pretty accurately with fib extensions. They provide you some really good levels that the markets like to respect. But that's a whole different lesson. And I don't want to get into that at this moment with this video, but it's a little bit more about guessing. Where here, using this actual data gives you a good firm number that, hey, 476 probably minimum and a lot more. I'm good with this number. I'm good with this number. Yeah, I'd be really interested in this number here, 900, or even a 1400 bucks. But you know what, guys? When we're doing long-term investing, you can't get, just like in crypto, in any investment, you can't get overly greedy. It's going to come back and bite you. So if you buy at 886, and you're going to make a $477 investment. Now think about this. If you're okay buying here, knowing that you have a chance of it coming down, and you have the funds available to continue to buy as it goes down, think about how much more increase you're going to be able to average out that daily cost as we start going up. So that's another thing you want to think about. Again, if you're thinking long term, it's okay that it goes below as long as you can mentally prepare yourself for that. And that's the key in trading is that mental game. So 886. Now from here, where can we go? There's gaps all the way down to $40, guys. $40. People are thinking, wow, that's really low. That's giving it almost back. I mean, look at where it started. It started at 29.05, and it's going to come all the way down to 40 bucks, $11 off where it started. That seems a little too aggressive. Well, here's the fun part. If you think that is improbable, and you have seen in crypto how a lot of these assets like to follow a pattern, come come follow me real quick here. Let me tell you a story. Let me tell you a story of the collapse of the market from that began from April of 2003 and ended in March of 2009. And let's see what history taught us about this asset. Let's see. We're going to do the same exercise as we did right there. And just for the sake of, just OCD. I need to find the lowest point and insert that. 2473, 2473. Okay, just give me 1 second. Let me just adjust this here. 2473 as our low point. You don't have to do this. I'm just anal. There we go. So that's our low. There's our high. And look at this. Look at where we turned around. Look at where we turned around. And that is not even the mind blowing part. That isn't the mind blowing part. Let me show you the mind blowing part. Watch this. Watch this. I'm gonna do this with you guys live so you can also understand the gaps. Here's a gap there. There's a gap there. Those got filled. Here's a gap right there. Now, look at this. Look at this. And look at where we turned around. She came, that's the last gap. No other gaps down here. Look at that. Tell me that doesn't blow your mind. We came down to the last gap, and that's where we took off. And look at where she came. She came below the 886, almost to where she started, hit the last gap, turned around. Remember, guys, gaps are markers left behind by market makers that want to bring the price back down at a later time. Now, this is what happened from 2003 to 2009. Now, let's see the current. Where are we at? Look at this. Look at this. Look at the last gap. Look at where we started. Look at this, guys. So you telling me that $40 isn't a possibility? $40 isn't a possibility after what we just finished seeing on the last cycle? See what I mean, guys? These things follow a pattern. Look at this. Perfect retrace. We went from here all the way 1400% ROI. I mean, if that doesn't blow your mind, I don't know what will. All right, guys, that's the end of the video. Like I said, I just wanted to show you. I'm gonna start in our group. We're gonna start. We have a special room just for stocks, and we're gonna be putting these videos, the stock videos and the stock charts in there. You can open up a stock account at Robinhood, guys. Easiest place. App on your phone. Plug in your bank account information. do your you can easily trade off of your phone. They make it very easy. Ameritrade is another good platform you guys can use. So whatever, if you guys are interested, guys, in stocks, and never had a really just never knew how to do it, that's what we're here for, guys. I think it's going to be a fun journey. I think it's going to be a good way for us to diversify our portfolio, and we're going to cover stocks as these continue to drop. We'll find good entries. And again, these are long term, so you gotta separate that from crypto. Even though some of you guys are trading crypto for long term, this is a little bit longer term, slower to see that return. Imagine this, guys. You're holding something for 3 years at the same price. Okay, so just think of that. You're holding some. This was 3 years, 3 years that this stayed in one price. So that's the type of a mentality you have to have. This isn't something you're going to be looking once you buy it. This isn't something you're going to be looking at every day like you do with crypto, or every week, or every month for that matter. You're gonna buy it. You're gonna set it and forget it. If all some of you people that are old like me will understand that saying, very popular in the 80s and 90s, or more in the 90s. You set it and forget it. There's that rotisserie chicken thing that I still have it. You put a chicken in there, you set it and you forget it, and when the timer goes off, you have a perfectly cooked meal with steamed vegetables on top. You older people are laughing your asses off at me right now. You young people don't know what the hell I'm talking about. But ask your parents what set it and forget it means to them, and you'll know what I mean. So when you buy stocks, guys, it's not to flip it. It's not crypto. 5, 6, 7, 10 years is when you're going to start seeing those returns. However, you are going to set some reminders on your trading view charts for when it hits 100%. So whatever level you buy, you're gonna take this tool. You're gonna see where that 100% marker is. You're gonna set yourself a reminder, and when it does hit, that's when you are gonna open up your chart. You're gonna put yourself a reminder to either utilize that extra free position to diversify, or you're gonna let it ride, but you're gonna put a stop loss on those areas. Though again, in the stock market is not as it's not as volatile as crypto. Big companies like Boeing, they're going to have their times where they're going to drop like this, but look what happens. It continues to go. So, it's just a different pace that you have to get used to. A lot of things can happen inside of a 10 year. So don't keep those stop losses too tight, because look at this. It can knock you out, it can wick, stop you, and then take off and leave you behind. No different than crypto, guys. It happens in crypto all the time. You got these stop hunting wicks, and then she takes off, and she just took you out of your position that you held for 5 years. So that would suck. You held for 5 years, you get knocked out of a wick, and she keeps on going for another 1,000%. I'd be pissed. Anybody would be pissed. So keep that in mind. But I hope you enjoyed the video. We're gonna make more of these, and I'm posting this one on Twitter as a sample of what we're gonna be covering in our group. So if you're interested in joining our group, come join us, bleedingcrypto.com. Moving forward, for my members that are listening to this video, we're going to be posting these probably on a daily basis, and we're going to look at some major assets. Same principles with crypto, no shit coins, so no shit stocks. We're going to doing blue chip stocks, Boeing, Amazon, Google, Microsoft, big companies, guys. Johnson and Johnson, those type of big. They've been around for a long time. Guys, have a good weekend. Please be safe. Social distancing, guys. This virus is real. No matter what you believe and how this thing started, guys, people are dying like crazy. They're dropping like flies. So, regardless of what your theory might be about coronavirus, just know that it's real, and that you could die from it. You have a good chance of dying from it. So, please be careful, guys. Have a wonderful day.